Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Warren Buffett is one of the best investors of all time, and it's not uncommon for people looking for great stock ideas to shop from the list of stocks that are part of Warren Buffett's Berkshire Hathaway portfolio. We're going to talk about a couple of stocks today. This is The Smattering. I'm Jason Hall. I'm joined by my friend Tyler Crowe. Hey, Tyler.
How's it going, buddy?
It's good, man. It's good. I'm excited to be doing this video with you. We're going to talk about a couple of companies here. I'm going to talk about Taiwan Semiconductor in a couple of minutes, but you're going to talk about one that's a little bit maybe less known or less considered a Berkshire Hathaway Warren Buffett stock. What stock are you going to talk about?
I will argue that as a stock, it's less known, but it's probably one of the most known companies from the consumer standpoint. It's Kroger. There's a pretty good chance that there is a Kroger grocery store within an arm's reach of whether you're currently living. And I think
whether it's called Kroger or part of the Kroger family, there's a very good chance you're right.
I believe in the movie terms, it's the Kroger extended cinematic universe. So you have a monster operator in the grocery store business, which, it doesn't sound like a great one. Low margins, kind of little economically sensitive to food, food prices, inflation, things like that. But Kroger itself has been a phenomenal operator in this business for a very long time. It is one of the few grocery retailers out there that has been able to create long-term wealth, maintain and beat the S&P 500 on a total return basis. And, over the shorter term, things obviously can be a little bit less lucrative, obviously, because it's a grocer. Nobody's paying attention to it. However, it's just one of those ones that you can almost kind of set it, forget it. It's just going to chug along and do what it does through modest revenue growth, some share buybacks to help juice some earnings per share numbers, and pay a reasonable dividend. It's increased its dividend 246% over the past 10 years. So you're getting a pretty good stock already. And right now, with its current yield of 2.16% on its dividend, it's the highest its dividend yield has been in the past 10 years outside of the pandemic panic in like 2020. So I feel if you're using dividend yields as a proxy of valuation, great opportunity right now. On top of that, you have this nice catalyst where they are looking to buy one of their largest competitors, Albertsons, in a $22 billion deal. It looks like a nice catalyst for the company. Management believes it's accretive to earnings today because they won't be actually adding much of any new shares to do this. So there's talk about it maybe not going through for antitrust reasons. But even if it doesn't, good company that's been doing this for a long time.
Love it, Tyler. I think this is an underappreciated long-term winner. Thanks for bringing that one to the show. I'm going to talk about one that's certainly got a lot more attention more recently, and that's Taiwan Semiconductors. And it's also a company that the stock has really beaten down. So you look at Kroger, like you were talking about, Tyler, this is a stock that has a long history of outperformance, and even more recently, it's up mid-single digits this year, while the S&P 500 is still down by double digits, right? And even with the weakness of the economy, like you're saying, with grocers and some price sensitivity, it's kind of business that tends to do fine during economic weakness. Now, you take a look at Taiwan Semiconductor, and this is a highly cyclical business, right? It's heavily tied to the consumer electronics industry. It's heavily tied to the consumer economy, right? And we've seen there's a cyclical shift that has happened within the semiconductor industry with demand, especially for things like desktop computers and things that it's affected it. But the reality is that the secular story continues to be for enormous long-term growth. And one of the things that we know that Warren Buffett looks for are those economic moats, as he describes it, these really powerful, durable, competitive advantages. And you think about a company like Kroger, the benefits there, those competitive advantages are its scale, gives it some cost advantages, right? We know that that's a real value when it comes to a low margin business. Having cost advantages is really good. For Taiwan Semiconductor, it also has cost advantages because of the scale of its manufacturing and its focus on being a foundry and a contract manufacturer. It's also built something that you tend to see from like a social media platform or a payment platform like Visa and MasterCard, and that's a network effect. Again, because it doesn't compete with its customers for products for the end market. The more companies that come to it to manufacture their semiconductors, the more it helps everybody because it increases scale and helps drive down cost. The reason it's really compelling to me right now is because while the secular opportunity is still incredible, there is a cyclical downturn right now. This is a stock that's down pretty sharply still, even though it's rebounded some, particularly on the news that it became part of Berkshire's portfolio. But you look at the long-term opportunities to continue to invest in capacity because demand will continue to grow. We're talking about $1 trillion in annual revenues for the semiconductor industry sometime in the next decade. This is a substantial industry that's growing, and this is the biggest, maybe one of the most 2 or 3 most important companies in it.